Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It is Thursday. The market moved up nicely today, second day in a row. So we might be in at least kind of a relief rally. That would be interesting if we were in a relief rally. Interestingly enough, today, Tesla stock really moved up strongly, up over 10%. That is amazing. So it does indicate that maybe we're in a at least at least in a potential bull market, not totally, but the Dow Industrials moved up. Tesla gained over 10%, and the S&P is also looking very good too. So let's take a look at the Spider first. Just to kind of see what's going on there. And we were kind of expecting on the Spider a move, up potentially as high as 410. Currently, the Spider is at 403.46 after hours, but interestingly enough, it has moved above the very critical the very critical 200-day moving average. Plus, it is over 400. So very interesting. The reason for the potential, the potential resistance is that it did make a high back here in the very beginning of December of last year at about 410. So that is the resistance. That's where we have to move above that level. And if it moves above that level, it could be a sustained rally. So we might be getting ready for potentially a nice little rally here on the market. So it's looking very interesting, and hopefully we can sustain this through tomorrow. Taking a look at the stock of the day, of course, that was Tesla. And I don't think you can get any more stock of the day than this one. It was up at a fantastic 10%, 15.83. It's up to 160.27. That was the close. Off a little bit after hours, down off a little bit after hours, but just not very, just barely. And as you can see, interestingly enough, it has moved above the very critical 10-week line, and it does look like maybe if we can stay above that, we may have a little bit of a rally on our hands. That would be a great thing if that were to happen. But definitely very interesting. This is definitely telling us that somebody is getting back into the market. Also, we had some nice action on some of the other stocks as well. But I want to show you the bulls versus bears, and that's also a very interesting chart here because that kind of shows us the sentiment of the writers that are in the market that write on the financial on the markets. And currently there are more bulls than bears with the market writers. So interesting comment there too. So the question is, could we be getting a Santa Claus rally late? I don't know. But I tell you what, my stocks certainly were up today a lot, and that was the second day in a row that has indeed happened. So very interesting things, very interesting looking there. Here's what I currently have in my portfolio. Now, I have no short positions, but I do have some. I have sold some calls, but I haven't shorted any stocks. AEHR, this is the semiconductor test equipment company. I've been holding this one. It was up today a little bit less than 1% at 36.50. That's looking pretty good. Floor was down a little bit. This is the construction company in the oil services area. Is down a little bit, not that much, about 1%, but the volume was up. This one is pulling back, and I'm going to take a look at the floor in just a second because I definitely think it's making a move higher. Lattice Semiconductor, that was up nicely today on lower volume. It was up about 1%. Shopify, this one has really been breaking out. Shopify, I did increase my position in Shopify I have it in two portfolios now. So I'm looking, at Shopify, potentially for being, much more, having more exposure to Shopify. I do have a call that I sold on Shopify as well. ExxonMobil, that was up tremendously today, up to 117. Now, remember, this one On Tuesday, the New York Stock Exchange opened, but it didn't. But the computers had a glitch and it pulled back. Unfortunately, that sold me out of part of my position. I would have even gained more in this one. But Exxon is moving up very nicely. Chevron has announced that they're going to be buying back shares to boost their share price. They had a tremendous run. I think we need to take a look at the Chevron chart because it is showing it's very bullish. CVX, of course, is the symbol on this one, and this is also one of the major components of the XLE, which is the Spider Select software that covers the energy sector. This one, look at this. It gapped up, and this is not, this is no small stock. This is Exxon. This is a Chevron. Very, very strong buying here. I definitely think that, we should consider possibly maybe taking a position in this one. It looks like it's up even after hours, but the announcement was, tomorrow it's going to have its earnings, so I wouldn't buy it before that. But if we have good earnings on this one, this is very, very bullish, and this could be a very big sign. Let's take a look at the technicals on it. Basically, we are a little bit extended above that 21-day line at about 5.3%, but definitely could buy it here. Not a problem. And looking at the pattern recognition, it's coming out of a cup base with about 1% to go for the pivot. This is a good place to buy it right before the pivot. 78% checklist on this one. This is CVX, of course, Chevron. Everyone's heard of them. You've probably been to there's more than enough times. You've probably gone to their gas station, that they have. So CVX is setting up very, very nicely, as well as also XLE, which is basically the ETF that basically contains CVX and ExxonMobil. So let's look at the XLE just real quick here and see if it kind of follows the same pattern. It absolutely does follow the same pattern as Chevron. So no surprise because Chevron makes up a large percentage of this one here. Now, I did buy it today in one of my portfolios. I bought the XLE. Didn't buy a whole lot of shares, just kind of testing the waters, but it came off this handle very nicely and moved up. Down a little bit after hours, but I definitely think we're going to see some strength in the XLE tomorrow. So it does look like, it does look like we're seeing funds cycle in still into these big cap oil stocks, not the tech stocks, the oil stocks. That's where the action is, with of course the exception of Tesla that was up 10% today. I probably would not be a buyer of Tesla until it moves over, until it moves a little bit higher. But definitely looking at buying some of the oils because they are looking very strong, and it does look like we're gonna get some good action on them. Okay, this is a question coming from no name. No, was it no? See if I can get this right. Um, oops, this question. Ooh, okay, come on. This question is coming from. This is a question about Shopify, and let's see if we can answer this. Did we cover Shopify already? No, we haven't really covered Shopify. I definitely added Shopify, and I've been adding it for the last 2 days. Done very well on it so far. Now the question is, will that continue? So what I'm going to do is I'm going to jump over to the shop chart for SHOP. This is Shopify, of course. Now, I'm not sure exactly why it's doing so well, but they did announce that they were going through a price increase, and that seems to have triggered a buy from some large institutions. They seem to be wanting to buy Shopify, and very interesting. As many of the retailers are looking for a way to have more of a digital presence, this definitely provides that. And so this one may be on a big run. It was off a little bit after hours, but today, very strong gain. It was up once again, a little over 2% with very strong volume. The thing you really have to be looking at here is the volume, and we're definitely seeing that volume come in. This red line here, of course, is the average volume. So this is an exponential sale. So this was a tremendous yesterday. This was a tremendous move into the stock. So if we're looking at the 10-minute chart, we can definitely see definitely a trend moving higher with Shopify. Just a whole lot of buying going on here. The question is this is this institutional money or not? You never can tell. If you were just looking at the checklist, we would say probably not because the checklist it's acceptable at 67%, but certainly not a great chart on the technicals. In terms of in terms of the weekly chart, let's go over the weekly chart um, on Shopify. And this is probably telling the tale more than anything else. If you'll notice, it came way down, and then basically there's resistance. It moved beyond that resistance being at about 45.45, and it has moved above that. Now it's 48.01. So this seems to have been where the resistance was, right about here, and it's moved above that on heavy volume. You notice how the volume has been coming in here. So moving in on heavy volume, we're going to see earnings here in about 20 days. So about a little less than 3 weeks, we're going to see that coming in. But it's steadily, sales are growing steadily at about 20%, looking very, very good. We have positive cash flow. It has a very high PE ratio, but that just tells me that a lot of people are looking out to the future in this one Shopify. So maybe that's the reason things are coming and as well as they are. The number of funds had been declining, but I want to see what's going to happen when they have earnings. But right now it does seem like there is a lot of action coming into coming into Shopify. So can we buy it here? That's the question. I think it's a little extended, to be honest with you. Let's see how far above that 21-day line it is. Well, it's way extended. It's 20% above that 21-day line. So here's what I would do. Sometimes you just have to buy, and that's what I've been doing with Shopify. Waiting for the exact right time sometimes can get to the point where you can't really get in. I do expect it to kind of, if as long as it keeps on this track. I mean, this is a very strong track. We could see it over $50 by next week a share. So, do I recommend buying it? Well, I'd be a little bit careful here, but I definitely have been buying myself. So, don't want to be, don't want to say something that I wouldn't do myself. So, I would consider possibly building a position here in Shopify. All right. Hello, Jim. Good idea of the bottom for fishing for Intel. I will be honest with you, I am not a good bottom fisher. You would think that INTC would be, they came out with some pretty bad news, unfortunately. It's off after hours. I would just be careful with Intel here. I think what's happened with Intel is that I think in the semis we've seen we've seen a kind of a rotation out of some of the big cap semis into some of the more specialty semis. It seems like the leadership has changed in the semiconductor sector. Let me show you two of the stocks. Let me show you the stock that I'm holding currently in the semiconductor space, and that is LSCC, which is the Lattice Semiconductor, and that is a very different story. That is presenting a very, very different story than Intel. So comparing the two stocks, Intel and Lattice, I think you'd agree with me that Lattice is definitely the better of the two by a long shot. And this has been going on for a while. You know, Intel just has not been holding its own. Over the last year, Intel has lost over 40%. Let's take a look a little bit closer to the time frame that we're in. Um, I'm just going to try to look at the last 3 months: November, December, January. And as you can see, even if we started way back here in September and we bought both stocks, Intel would be up a little bit. It'd be up about 15%, but Lattice would have been up almost 55%. So really comparing the two in the space, you got to go with something like Lattice because it's just leading Intel. Now Intel of course is a much bigger company, but it has issues. The thing about Intel is that it does have issues. It seems like right now, the two stocks that I really like in the chip space are basically monolithic power, MPWR, and Lattice Semiconductor. Those are the two that I definitely like the most. Let's compare both of those real quick, so get an idea, of kind of what's going on there as well. So I'm going to go over here to monolithic MPRW. There we go. Monolithic power MPWR. There we go. There's monolithic power systems. And let's put Lattice in there as well. And taking a look basically just at the last 3 months, I'm trying to get a little bit shorter time frame, but these are right now, these are the two best performing of the semiconductor stocks that I can find, and that's Lattice Semiconductor, which is a little bit better performer than monolithic power, but they're both doing well. This is basically just 1 to 3 months here. So starting, 3 months ago, if we bought both of these, we'd be up about 25% with Lattice, but we'd be up almost 50%. I mean, with monolithic power, we'd be up about 25%, but with Lattice, we would be up almost 50%. So this is the one I think you want to concentrate on right now. All right, we have a question for some of the Chinese stocks. This is VIPS from Matt. Let's take a look at VIPS really quickly. There's been a lot of um, there's been a lot of action there. I don't currently have any China exposure right now, but this is not looking bad. These this area is not looking bad. So let's pull up the chart here for VIPS. Here we go. This is VIPS, and basically what's going on here is this is what they call the golden cross. The 50-day moved above the 200-day, so that's a very bullish sign right there. 99 relative strength. It seems to be in a consolidation right here, getting ready to punch out of that consolidation. The question is, where would we want to buy it and how would we want to buy it? Well, it does appear that there is some resistance right here at about 1590. So if you did want to buy this one, you'd want to go with a buy stop limit order. So as it moves above about 1590, that's where you probably want to buy it. So that kind of would be the the way to go on that one. All right, looking for an entry on Tesla to get back into Tesla. I don't know. I'm still a little bit on the sidelines with Tesla. I still think it needs to have a little bit more strength. But I think we're getting to the point where we can possibly start looking at it. Here's the issue. It has cleared the 50-day moving average, which is a good thing. I would try to buy it. I think you got to wait a little bit on this one. I think you just got to wait uh, until it clears about this 200 level. That's really the area that I think would be the ideal. If this one is going to come back, it's going to come back over 200 because here's one of the things about Tesla that you've got to be aware of. There's a tremendous amount of overhead supply with Tesla. Even though it's come up here, as you can see, there's so many people that bought it above so many people bought it above this 200 level that anytime it's going to get close to there, I think we're going to get some selling because a lot of people are going to want to sneak out the back door on this one, just because they've held it, they've lost money, they've now carried the loss over. Many of these are long term holders now because they were going to thought they were going to get in and out, but until it really moves above this level, and I really believe the 200 level, 180 to 200 level, I think that, we can't really make sure that it has actually reversed. So I would hold off on buying Tesla right now. And let's just watch it. Let's see if it can move above 180 and then possibly 200. That's where I'd be more interested in it at those levels. So that's just kind of how I look at it. How I look at that. All right, CRM. Somebody is interesting about CRM. Of course, that's Salesforce.com, and they are a big board stock, believe it or not. But I think that they have been weak, and now they have reversed. I don't know. I'm still the jury's still out on this one. The question is this a reversal, a true reversal, or is it a fake out? I'm of the opinion that this is still not totally mended yet. So what I'm going to do here is draw that trend line. It does appear that we have moved above. It does appear that we have moved above the trend line, but we're just getting to an upward trend. But I tell you, I don't think I'd be rushing to buy this one. I think that there's a lot of issues with CRM, with just with the product category and everything. I think that this is an area that is CRM systems are very, very vulnerable. And I just think it's probably I would probably not be in it, even though we had a tremendous buying today. This is kind of I'm really suspicious with this rally here in this one. It's got a 56 checklist, which is way below what I would buy. And it is, but it is right on it is a little bit extended on the 21-day line. So I would take a caution with CRM. I probably would not be a buyer of CRM right now. Lisa's asking about the SQQQ. And of course, this is the inverse ETF for the Qs. And so this one definitely interesting stock. Well, it's really an ETF. Let's analyze that just quickly here with the SQQQ. There we go. And here we are, pro shares. Yeah, as you can see, and this is not surprising because the market has been turning up. We're in a downward trend on the SQQQ. Now, when the market is in a confirmed uptrend like it is now, this is not a stock this is not an ETF you want to be in. The ideal time to buy the SQQQ is when there's a market change. There's a change in the market. Now, there's an easy way to find this out. If you look at my slides, you'll notice, and I want to show you this. If you look at my slides, you'll notice that there's a green circle in that. That means we're in a confirmed uptrend, and that means probably not a good time to be in the SQQQ. Now, if this turns to yellow, that means that we're in an uptrend under pressure and to start reducing your position. And then if it hits red, that means that we're in a market correction. That's a very good time. When it turns red, that's a good time to buy the SQQQ because remember, the SQQQ moves against the S&P 500. So if the S&P is going down, the SQQQ typically is going up. So that's kind of the deal. The question from Charles, good question. Are you still mostly cash? Well, on Tuesday I was, but now I am about 70% invested in most of my portfolios. I have been moving in as we've been seeing some strength in the market. So I am about 75% in the market. Let me see if I can show you kind of what my lineup is in the large portfolio. And let's see if I can do that. Takes a second for it to draw this out. And it's still calculating here. Hopefully there we go. So if we look at the, oops. So if we look at the exposure that I have currently, let me do this. Let me shift over to my exposure. So this is, my exposure essentially. If you'll notice, mostly have a large position in Exxon. That's a little bit more than, it's about a third of my portfolio. Now I have sold options against this. This is a third of it. My cash is up here. It's a little bit more than 10%. I still have some cash. I also have a fairly large position in Shopify. Uh, let's see if that's. See if I can show you that. Yeah, I have a fairly large position in Shopify. My largest position is ExxonMobil, then Shopify, then Lattice Semiconductor. Have a smaller position, very small half position in Target Hospitality, Fluor, another half position, basically a one position in Halliburton and AEHR. So that's kind of where I'm at currently in terms of my exposure to the market. I have a fair amount of cash, but I am moving as quickly as I can into the market. I'm moving into the market as best I can with that. So thank you for that question. All right, let's take a look at NFE. Okay, is that right? NFE for Noah. Thank you, Noah. NFE. And here we go. By the way, if you're watching on TikTok, you can jump on over to YouTube, super duper easy, and see all the charts and everything with a full screen. I can't broadcast that, unfortunately, to TikTok. So you're going to have to bear with me on this one. New Fortress is this stock, and it does appear that it did get some little bit of support here. Here's the issue that I have with New Fortress. It's below the 200-day line. I don't think this is a good place to buy it. I think you want to wait until it moves above that 200-day line. Another thing you got to be careful with here is that we have what they call the death cross, which means that the 50-day moved below the 200-day. That is a bearish signal for it. We do have an improving relative strength, but 71 is not good enough. I want to see 80 or better. So I would not buy this one just based on that. Just based on that. But if we compare it, let's compare it to XOM, which is ExxonMobil, of course. If we compare New Fortress with ExxonMobil, so this is one of the reasons I think that you got to be a little bit careful with New Fortress. I mean, it is sort of making a bounce here, but if we look at just the last performance in the 1, 2, 3 months, the last 3 months, it is still in a downward trend. I mean, New Fortress is still in a downward trend, whereas the Standardberry XOM is in an upward trend. So I would be moving more into the larger integrated oil companies like Exxon, Chevron, possibly Hess, or the XLE, that I would be going after New Fortress. I think it's going to give you better performance. And I mean, it is boring, but that's sometimes the way it is. So I think that you're going to get a better performance out of something like a large cap, a large cap oil right now. It seems like a lot of the money, at least at the beginning of the year, is starting to move towards the big cap tech stocks, the big cap oil stocks. That's where you got to be looking. That seems to be where people are piling in. Thoughts on BTU? This is from Bombadoc. This is BTU is Peabody Energy. BTU. It's the biggest coal company in the world that is on the exchange. It's still doing okay. It is above the Oops, it is above the 200-day line. See if we can get that up. There we go. So this is um this is Peabody. There we go. This is Peabody. It's been in this. It's sort of you've got to draw the reversal line here. This could potentially bounce off of the 200-day line. Right now, it's just barely above the 200-day line, just almost on it. And the 200-day line, it could bounce off of that and move and move higher. I wouldn't sell it here in this position. I would wait to see if we get a bounce off it. If it moves below that 200-day line and it stays there, I would sell it. So if it moves down to here in this area and then it doesn't bounce, I would sell it. But I would wait for the bounce here on this one and see what happens because I just think the area is still a good area of the market. All right, let's take a look at W. WBD. I don't know WBD. Let's see what that is. WBD. Ah, Warner Brothers Discovery. This is the new company. Boy, you know what? This just doesn't look good. $15 for this stock. Wow, that's really, really bad. Look at this. It's just underperforming all the way. Not a good look at all. I just think you got to skip this one. I don't like this. It's a terrible checklist. The pattern recognition cup, and it's below that. Wow, not looking good. On the technicals, basically it's below every index. Wow, I just don't like this stock at all. I just think you got to find something else. Look at this. This is the downward trend that we're seeing with Warner Brothers. So right now, I just think you can't skip it because unless it gets better real fast, it's not going anywhere. So I wouldn't be in Warner Brothers right now. I think you're better off with something like some of the chip stocks. Mark is indicating that he's interested in monolithic power. This is a really, I think this one is setting up very nicely. MPWR, of course, is the symbol for it. I don't own this one, but I've been trying to buy it at the right place because I do think that this one is going to be leading us out of the. I mean, this in the new uptrend in the chips, it's going to be monolithic power probably in lattice. This is starting to show some nice movement. It's above that 200-day line. I typically don't like to buy anything below the 200-day line. We have an 86 relative strength, so that's good. It's above 80. And let's look at the checklist on this one. Checklist is very, very good. It's an 89 checklist. So very, very good there. Definitely good. Now the question is, can you buy it at this point? Let's take a look. Well, we're quite a ways below that pivot. We are above the reversal line that I drew here. So you could probably start sizing a position here. I wouldn't go in with all guns, but I definitely think this one is good. Let's look at this compared to lattice. This is monolithic power. Okay. right? And this is monolithic power. And then let's compare it to lattice semi. There we go. And let's compare this to this. You can see this on TikTok. Let me just so if we're looking at monolithic power and lattice semiconductor, these are the two that I like the best in the semiconductor space. You can definitely see that lattice is outperforming monolithic, and it's actually the only problem with lattice right now is it's getting a little bit it's getting a little extended, but you can see that in the last 1, 2, 3 months definitely has outperformed monolithic. Now, if we go over to the lattice chart, I mean the lattice semiconductor chart, let's see if we can get into that one. Now, I was buying this a few days ago as it moved into a new um there we go. As lattice moved, there we go. So, I started buying lattice here as we started in this reversal. So that's where I started buying it on the 18th. I started buying it, and then I've been adding to my position. This is probably a good place to buy it because this 75.47 is the higher high, so that potentially is a good place to buy it. One of the things I like about lattice semiconductor over monolithic is that it has a 100% checklist. So I definitely like that. It's a little bit extended, I'll be honest with you, 7.36% above that 21-day line. That's why I haven't been adding to it. But I do think that you could buy it here. Why? The reason I think you can is because of this high here that came in at 76.47. So we're very close to that. It's come down. It had a high handle, then it created another cup, and then I think that this time it's going to move above that resistance. So that's the reason I like lattice semiconductor more than monolithic. I just think that, but I think they're both excellent stocks. All right, we have a question about American Airlines (AAL), and I have never been good at trading the airline stock. This is one of my airline and biotechs are two of the tough ones that I have not been a great buyer of. Just never been a super buyer of these stocks, but we are starting to see some travel waking up after the COVID thing. The biggest problem I see with American Airlines and a lot of these other stocks is that they just have a lot of overhang of debt, and it's I don't know. Yes, the stock is cheap at $16, but I think it's cheap for a reason, and it is above the 200-day line. I just I just a little don't really I'm not a huge fan of cheap stocks because, it sounds great, you can buy a lot of them, but I don't think it's a good rate. 17%, 7% above the 21-day line. I just think you need to avoid it, at least for now. I wanna see a lot stronger stock here before I'm getting into it. So, that's kinda my story here. I wanna look at also at On. This is the sneaker maker from Switzerland that was the stock of the day on Tuesday, no, on Wednesday, yesterday. Just kinda wanna see how it's shaping up. It seems to be doing pretty good, coming up above, just riding up the 10-day line. Now, I do like this one, and I think it's well set up. Checklist could be a little bit stronger. I'd like to see it a little bit stronger, but from a technical standpoint, it's looking pretty good. Now, you wouldn't probably want to buy it here because it's a bit extended. The price to would have been below 20. I didn't do that, of course. But this is one that does appear to be doing well, and kind of an interesting area in the market. All right. Your checklist could give a quick overview. Oh, yeah. Oh, on the checklist, give a quick overview of the checks. Okay, that's a good question. That's a good thing to go into. Let's do that with on. Now, what I'm talking about, this is the William O'Neill checklist, invented by William O'Neill, who is the founder of Investor Business Daily. Now, this is one for on. So this is going to show us if it's a fail or not. This is earnings per share. Is it better than 80% of the market? No, so that's a fail. We want to be in the top 20% there. Relative strength. This is probably the most important, in my opinion, criteria. Is the relative strength in the top 20%? Is it greater than 80? No. We want to see it. We want to buy something. I want to see it typically in the top 20%. Now, this is in the top. This is getting close, 76, but it's not in the top. This is AD rating, A, B, and C. This is is it being acquired or disposed by the funds? And ABC, yes, it is. It's being acquired. So the funds are buying this one. There's a positive amount of sales on the funds there. Now, what was the change on the earnings per share? What percentage of it was it up or down? Well, this one was up. So was it with the sales? These are the fundamental analysis pieces here. The current price, is it above $10? Now, why is that important? Well, the reason is because typically funds will not buy stocks below $10. And the reason is because if you go below $10, it becomes much, much more volatile. Just small moves can really be bad. So typically you need to see the stock move above $10 before it can be bought by the fund. So that's why I typically like to concentrate looking for funds, looking for stocks. I'm not saying I won't buy a stock below $10, but typically those will be commodity stocks and not companies. They'll be commodity stocks like oil drillers, something like that, where there's an underlying commodity. But $10 or above. I also typically the best time to buy something is when it's within 15% of its all-time high, and that William O'Neill talks about this a lot. And is the 50-day, is there enough liquidity in the issue? 50-day average volume, it must be above a million shares. And are there 5 funds in it or more? So that's kind of the checklist. I'll probably put out more on that, but that's a really, really good way, just very, very quickly, to just go in and see, does it even make sense to buy this thing, or does it make sense to skip it? Okay, well, I have jammered on here for quite a bit. We are kind of coming to the end here. As always, I implore you to like the show. That helps us so much. When you like the show, it gets us out there to more people. And I think a lot of people would be interested in this content. They just aren't seeing it because we haven't smashed that like button enough. We got to really smash the like button to get it out there, and so we can be seen. But please like the show. Also, if you are not already on the Action Trade Alerts, super duper easy to do. Just go to www.Dallas Trading Floor, and we'll get on the mailing list. And we have some good lists, and this is for free. We also have a paid Discord group if you're interested in that, where we analyze the trades typically within about the first hour or two of trading every day, and give ideas, and I kind of show you how I'm trading. So until tomorrow, thank you, everybody. Tomorrow, of course, is Friday. And let's see if we have one last one. Oh, thank you very much. So tomorrow is Friday. I will be on tomorrow at 5, same time. And I hope to see you then. And it looks like we're in an upward trend. We want to start moving into the market. Definitely looks like that now. I went, at the beginning of the week, I was less than 10% invested. I'm now over 70%. So it does appear it is time to start moving into the market. At least for right now, we're getting a little bit of a movement up. I'll be back here tomorrow at 5. Happy trading.